Welcome to Farm Your Daily, a field forward podcast. I'm your host, David Geiger. Today on Farm Your Daily, as the month ends and markets slow for the holidays, we chat with Reese Drenth of the Ground Level Dispatch about input prices and commodities. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Here Daily. And joining me on Farm Here Daily, we are going to take a look at the holiday marketplace that's happening right before Thanksgiving rolls out. And to do so, we have with us from the Ground Level Dispatch, Reese Drenth. Reese, welcome back to the program. Glad to have you here. And let's just start off. We are facing basically the end of the month with Thanksgiving. A little trading might be going on Friday, but for the most part, markets are going to open up until December 1st. So how are we looking at this approach to the holiday from a market standpoint, and what are you watching for?
Yeah, as always, thanks for having us, David. It is a short, slow holiday week. A lot of times holiday weeks can be one of two things. They can be very, very active. Why would they be active is because, something big happens or maybe something not very big happens, but because there's not a lot of market participants, you tend to get a little bit more volatility. You think back to like maybe 3 of the last 4 years during around the Christmas time, people expect it to be slow, but actually like we've seen some decent rallies. This week around Thanksgiving 2025, it doesn't really seem to be the case. Markets are pretty much flat everywhere you look across the commodity space, with the exception of the cattle market, but that's another can of worms. And we kind of expect it to be flat unless the Chinese decided to show up and buy some beans, which has been the case for the last several weeks. Again, if they were to show up and buy a bunch of boats either today, tomorrow, or Tuesday, Wednesday, or Friday, again, like the market wouldn't have a lot of time or a lot of participants to chew on that data. Again, that tends to lead to more volatility. So from our perspective, from the farmer's perspective, you'd probably like to see that this week. Like, hey, let's get some Chinese bean business while we're not necessarily looking. Let's have the market go crazy Friday and then try to rationalize it Sunday night into Monday, into the month of December, a new month for a lot of the hedge funds, traders, algorithms, etc. So we'll see. I mean, we're cautiously optimistic. More Chinese biz will take place. Is it going to be this week? It's kind of just a crapshoot from here. But to answer your question, short story long, yeah, it's been a quiet one so far. But I mean, there's still a little bit of time left on the clock, so who knows what can happen.
That's kind of the problem with markets like these. But also the question remains, we've had this this news of China being able to buy some of our products for almost a month now. How long do you think this will take for the markets to factor in some of that into our bean prices?
Yeah, we've had a couple really good conversations actually with growers and traders here this week on the holiday week about just that. I mean, if you look at the bean market, for example, the low this harvest, we're going to call about the 1st of October, $10.12 per bushel. So cash bean prices were well below $9 if you were selling beans on that day. So 10.12 on the close here today, we're at about 11.24, and we're
That's
going
about
off.
10% higher here on Tuesday of November 25th.
Correct, right. So like, we've rallied about $1.10 from the harvest low, and the first initial rally that we had where soybeans gapped higher. Okay, that again, to your point, was at the end of October, 10.24. And that was when, we got all that good information about how we're going to sign a deal. They're going to buy 12 million metric tons of beans, whatever. We've rallied. We've ripped hard since then. We're a little off the highs. But if you look at a chart for the last, I don't know, month, really, beans have kind of found a floor up here. And the chart looks very interesting, not to get into the weeds of technical trading, but, with a chart gap about 50, 60 cents below where we're at today, with no real momentous Chinese export buying today, You wouldn't, smarter people may not expect us to hang around here well above $11 soybean futures versus the GN, 11 and a quarter. Folks should start, basic marketing 101 or markets 101 would suggest, okay, China's not here. There's a gap below 60 cents below. Like, how fast can we go fill that gap beneath it? And bottom, short story long, again, we've just kind of been stuck here above $11. And the only thing we can come up with of why that is, it's the anticipation card, right? We're anticipating, markets are future discounting mechanisms. It's not worried about what happened yesterday. It's we're taking today's information, tomorrow's information, and trying to find a fair price of beans 1 month, 2 month, 5 months, 12 months out. Beans and corn, whatever futures market you want to reference. And so the anticipation of, China's still hanging around. They still bought a little bit of beans this week, a little bit of beans last week. Trump, the Secretary of Ag, the Secretary of the Treasury, even Chinese delegates have all said positive things about each other. The U.S. delegates have confirmed that we're right on schedule with China, placing orders for beans. We'd expect them to honor their commitment. I think that hope, if I don't typically like attaching marketing decisions or markets to hope, but I think that we'll just call anticipation is what is keeping us in the game here from a flat price perspective. And it's kind of, we want, it's not necessarily a coin flip, but for growers that are toying with that decision, a lot of growers have sold beans on the way up here, right? And they don't, if we're going to take another leg higher, okay, we don't want to sell too early. If beans are 11 and a quarter futures on the board today, Tuesday, 11:25, a week from today, if they're 12 and a quarter, we're going to feel really dumb making a sale today, if China does come. So it's kind of this holding pattern, both from a selling perspective from the grower of like, should I reward this market more? And from a futures perspective, and are the Chinese going to show up? We're just kind of in this lingering holding pattern. And the silver lining is this holding pattern is at 11 and a quarter again, and it's not at 10 and a quarter. So that is a positive. But I mean, as Father Time moves on here, and we get closer and closer to the deadline that was, has been given to us by the Trump administration, by the Chinese, kind of. They haven't really ever confirmed it, but apparently they agreed to it. Um, that anticipation premium, we'll call it, is probably going to get less and less easy to justify. So we'll see. Anything can change on a coin flip here. That's what's trading soybeans. That's what makes it fun. If you're a grower and you haven't rewarded this soybean rally yet, like we said, $1.10, $1.20 here in a month and a half, we would encourage you to do so on some bushels. Interest on carrying soybeans, basically, or AKA the price of your note at the bank, or the price of the interest on your note at the bank, instead of that you could pay off by selling beans versus just holding beans, does tend to burn a hole in your pocket. Beans are an expensive commodity. Take some profits, reward the market a little bit, reward good behavior, like we like to say here at Ground Level Dispatch, and talk with your trusted advisor about ways you can continue to stay long via futures and options exposure, or corn and beans that you have in the bin on price later at the elevator or in a bag at home, etc. But for the, again, and I'm getting long-winded here, I apologize about that, but if you haven't rewarded this rally yet, we'd encourage you to do so. And then we'd encourage you to find ways to reward future rallies, whether it be hold on to some more, get long on the board with futures and options, all sorts of creative things you can do. So
Essentially, the idea is if you have the ability to take even a small profit, it's better to take some instances of small profit leading up to whether it goes higher or it might go back down in some capacity.
yeah, I mean, there's that's the beautiful thing about markets. There's always a risk of either ripping higher or ripping lower.
Right.
But I mean, our philosophy here is see profit, take profit. I mean, you don't very rarely do you get $1.20 rally in any commodity. I mean, soybeans would be more often because they're more volatile commodity, but very rarely is it do we rally $1.20 in a matter of a few weeks. And so the point being is, again, reward good behavior, take some chips off the table. It's okay to still have chips on the table that we're risking, Um, but again, the market has given us an opportunity here with the Chinese business that hasn't necessarily happened yet. This anticipatory premium, we'll call it, is still giving us an opportunity to sell beans at decent prices with futures kind of leveling out here at 11 and a quarter. Again, we recommend making sales if you haven't. If you have, um, keep your head on a swivel.
Well, that's just the question as well, because it does vary from farm to farm on at what price is break even and what price you reach profit. Are we at a point now where a good portion of farmers are at least above, even if it's not a lot, maybe it's very thin margins, but at least seeing a little potential for profit here? I know corn is not really anywhere near that just yet, but are we there for soybeans?
No, for the crop that was harvested this fall, if you want to look like, okay, November, or excuse me, January 26 futures, let's just call 11 and a quarter for easy math. I think from a basis bid perspective, farmers can get anywhere from probably 10.60 to $11 cash. So we'll split the difference there at probably like 11 or 10.80. So, 1080 cash. Bean yields were good this year. We'll multiply that by 65 bushel beans, $700 an acre of gross revenue, right? If we were to sell beans for cash today, we think most farmers, we think on the average, the cost of putting soybeans in the ground was probably anywhere from 600 to 650 bucks an acre, and that's probably on the conservative side. I think depending on your land costs, a lot of growers could get beans in the ground last spring for 500 to 550 bucks an acre. So we're talking about anywhere from 150 to $150 an acre of net return on soybeans, depending on your market, depending on where you can deliver. And again, like, we're comfortable making a sale for 50 to $100 an acre of net profit. And the reason why is because we haven't seen a lot of net profit in the last couple years, especially Chicago Board of Trade driven net profit, right? We've seen yield net profit because yields in pockets has been outstanding the last 3 years while prices have been depressed. But CBOT net profit, we'll call it, we haven't seen that really since a small window from early 2025 back in January, February of this year. So again, rewarding the market for good behavior is always going to be encouraged around these parts. We think, the market's giving us that opportunity on old crop beans. We think in some instances it's giving us that opportunity on new crop beans, especially if the growers are looking at, from a soybean planting perspective and fertility program perspective, maybe cutting back on phosphates, which are obviously, we've talked about and John have talked about on this program too, very expensive historically, phosphate prices. So, growers can cut back on phosphates depending on if ground is owned or rented. Again, we think the bean crop can get in the ground from anywhere from 500 to 650 bucks an acre. We think there are opportunities to sell over $11 cash with the right kind of marketing plan or contract structure for 2026 soybeans. A lot of folks would say, here on November of 2025, November of this crop year, not even next crop year, but this crop year, maybe it's too soon to start marketing for the crop we're going to put in the ground this spring. We understand that argument, but again, we're see profit, take profit, right? If we can structure soybean futures, to where we can pretty much lock in or guarantee $11 cash out of the field next fall, there's probably money in that transaction. And so we would argue that it's not too early to start looking at some of those opportunities on soybeans, maybe here after the holiday season. And that's what we're working on with some of our growers on. And we would encourage folks to work with their trusted advisors on that stuff as well. And again, the reasoning behind it is see profit, take profit. And again, in the bean market, we do feel like there is some there for the taking. Your point about corn, we can't recommend doing anything at a loss today on really both old and new crop.
Well, you mentioned some input for soybeans, but for corn, it's one of many issues going on. I did want to touch on inputs before I let you go today, and that is because obviously we've been seeing a lot of challenges when it comes to the prices. And as we look at those challenges and as we look at the input cost for the farmer right now as they are preparing for planting, uh, what are the recommendations to approach that for from a marketing perspective? You mentioned for soybeans, maybe take another look at how much phosphates you're going to be looking at. Is it a similar? You can't really do that for corn though. You kind of need nitrogen for the current bushels that we produce, the current yields that we produce nowadays.
Yeah, I mean, nitrogen is a different story, right? And nitrogen prices are expensive, more expensive than where we'd like to see them. And you'd be hard pressed to recommend, or you really shouldn't be recommending lowering nitrogen rates to try and grow crops. That's not, that's not something we subscribe to anyway. But like from a phosphate perspective, there are tools you can use. There are cutbacks you probably can make at the farm level on phosphates. There are, maybe other alternatives, alternative forms of fertilizer too that you can start to mess with. But either way, a lot of the conversations we're having with our growers is around like, I would say 100% of them are planning on cutting back on phosphates. And again, as you make these decisions, like right now, it's kind of seed decision time, right? At least preemptively. Um, we would encourage running the numbers, right? And again, like on corn, those numbers are going to be ugly. It just kind of is what it is. And the market probably has some correcting to do between now and planting season to try and encourage more corn acres. I mean, we are using corn at a very, very high rate um, currently in this crop year, both not necessarily as much domestically. Ethanol numbers are good, but feed numbers are down, which is a cattle thing, right? But export numbers are huge. The world's using a lot of U.S. corn, right? So, like, the market needs to make some corrections again on the corn side of things, we think, before planting intentions are decided. But again, on soybeans, right? If you're running the numbers on seed, which we've heard that there's some pretty decent seed discounts on soybeans being thrown around there in the countryside. So we recommend, giving your seed rep a hard time about those kind of things, right? And again, we'd recommend working with your trusted agronomy advisors on where can we cut back on phosphates and why. Are there different phosphate efficiency products that we can use? And lower the use of real like MAP or DAP, that we can implement those kind of plans to save money. We'd really recommend again looking at those kind of things on phosphates, run the numbers, especially on beans. If you're thinking about planting more beans because of the lower cost you can produce that bean at, and then again looking at the markets to see, okay, if I do this contract, or if I do that contract, or if I look at this delivery point instead of this delivery point, what's my a conservative estimate on what I can get out of the field cash? And if that number is around $11 out of the field, again, like we would recommend kind of locking in some of those, uh, some of that profit via sales today, even though we haven't put a single bean in the ground. Could it be your worst sale? Absolutely. But at least the worst sale has some profit in it. And again, it's been a while since we could say that. I think a lot of folks sold beans off of the combine this fall for prices in the nines, and that's probably their worst sale. And that sale doesn't have a lot of profit attached to it, right? So things to think about here on a holiday week. I know I'm talking your ear off, but again, we're beating the dead horse because we see profit. We want to try and take profit here in the bean complex.
Reese, you have lots of information like what we've discussed in your guys' newsletters, the emails you send out at the ground level dispatch. In the description below this podcast, folks will be able to click a link that also will give them a chance to try a month free subscription to you folks over there at ground level dispatch. What would they see? Would they be able to see information like we've discussed, maybe some graphs, etc.?
Yeah, you bet. So Ground level dispatch, we write market commentary twice a day, once early in the morning, once towards the later afternoon, early evening. And then on weekends, 2 or 3 times a month, we try to put out editorials, talk about things more at length. So, like this discussion that we're having here now, maybe with some graphics or visuals to help make the point. And then even random stuff. I know we've written about things like John Deere's financial statements before, right? So like kind of a hodgepodge there on the weekend readers, but yeah, we try even on the daily level where we try to keep it to a 3 to 5 minute read. We do try to touch on these points in a more simplistic, maybe easier, take that information, print it off, take it to your trusted advisor, and talk through it kind of format. Um, and so, yeah, we'd love to have you. We'd love for everyone to give us a shot.
Reese Drenth is with the Ground Level Dispatch. Reese, thank you so much for joining us on Farm Your Daily.
You bet. Have a happy Thanksgiving.
This is Farm Your Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community. So please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again on Monday. Have a good weekend, everybody.